Welcome to Beyond Wealth, Success Unscripted with Matt Calnan. Discover the personal drive, professional journeys, and business strategies that have made a real impact. It's success from the inside out.
Welcome back, everyone. Today we're chatting with Lori Curtis. Lori has a master's degree in financial psychology and behavioral finance, working with firms and advisors to develop action plans to help create long-lasting and meaningful relationships with their clients. So Lori, first of all, welcome to the show. And why don't you give us a little bit of background on yourself and tell us about what you're doing?
Sure. Thanks, Matt. I'm so excited to be here. I think we'll have a good conversation today.
Absolutely.
Well, a little bit about me. I'm born and raised in the Peace Country, so grew up not far from Grand Prairie, Alberta.
Okay.
Lived my whole life there, but moved to Calgary a few years ago after the kids left the house, and I could move on from Grand Prairie. So very passionate about the Peace region and the trials and tribulations of living in northern Alberta. I am a certified financial planner, as well as a certified behavioral finance specialist. So I worked at a firm for, 16 years. And near the end of my career, I wanted more, I guess, more than just doing a retirement plan and selling some funds or whatever with my clients. And so I went and got my master's in financial psychology and my certified financial behavior specialist designation, as well as I went and got my associated certified coaching designation from the International Coaching Federation. So that's me.
And so actively kind of in your day-to-day business, so working with that, you said you're a certified behavioral financial specialist. So what are you actively doing with your clients? Like, who are you working with? What are you really trying to engage them with?
So we all have biases and beliefs and a story we tell ourselves about money and finances.
Yeah.
And what I really do with clients is I help them discover that story, because most of the things that we think about when it comes to money and finances, we actually developed those when we were a child. So before we even knew what money was, we already formed these beliefs. So as an adult, we might have a plan. We might have sat with an advisor, got a plan, but sticking to a plan is a whole different story unless you figure out those biases and beliefs. So what I've started doing is I started up my company, a Moneymaker Mindset, and I'm helping clients delve into those biases and beliefs so that going forwards, they can make confident decisions about their money, so that going forwards, they know the decisions they're making about money are the right ones for them. So trying to get rid of that, those feelings of being overwhelmed about money, scared, anxious and stressed about money. That's what I'm trying to help clients with.
Okay. I have to tell you an interesting story here. I think it's my last two podcast interviews that we've done, and they haven't been released yet. Although the time that yours is released, they will be released. One of those individuals focused on biases and beliefs and breaking down barriers and things that have come from childhood. Because, these aren't her words, but paraphrasing, no matter who you are, there's negative things that you hold on from childhood. You could have had the best childhood ever, but there's still those negative things. But she was talking about it more in a performance standpoint. But then the last guest that I had was also in the financial industry, and he talked a lot about the behaviors as well of individuals and trying to change those behaviors. So it's interesting that you're almost the merge between those two last guests there, as you're looking back into those biases and beliefs, but then pulling that forward to say, how can we then change, and correct me if I'm wrong, but how can we then change your behaviors by helping change the past and what you're taught? Because I'm sure, as all of us, we all love our parents, but they might not have been the best
Yeah.
as financial educators.
Yeah. And I love that, Matt, because that's how I find I'm a little bit unique, is that I have that financial planning background. I did it for 20, I've been a certified financial planner for over 20 years. So
Yeah.
I have that background, and then to pull the psychology piece into it, I can help you identify the behaviors, and then I can help you change the behaviors. And it's not all behaviors. We have some good ones, right? It's just trying to figure out which are the good and which are the ones that need to be tweaked a little bit.
Right. So what would some of those behaviors be like? Are we talking about the $7 Starbucks every day and investing in the market, and when it pulls back, you're getting scared and pulling money out? Like, are those some of the things, or what exactly are you going through?
Those are both really great examples. I'll give you, actually, I'll give you a really personal one of mine, because this is kind of one that sparked my interest in the whole situation. So I grew up, I'm the youngest of 5 kids, grew up on a grain farm. Of course, we were very poor. We grew up on a grain farm, 5 kids, a lot of mouths to feed. We were very, very poor. So if we look back at some of my money memories over time, it's definitely my story that I tell myself is money's hard to come by. You have to be very, very smart to manage your money.
Hmm.
And I have this very deep-seated fear of being poor. Like it's overwhelming how this fear is in me.
Like your brain's almost reprogrammed, right?
Exactly. Yeah. So knowing this about myself, I look back, I'm divorced. I look back in my marriage, and sure there was other things, but I look back and I see how controlling I was of our money. I know that was a huge factor in
Yeah.
our divorce, right? I had to know where every penny came from and where every penny went, because of that deep-seated fear of mine. So once I knew that about myself, in my current relationship, I'm very upfront. I'm like, okay, you want to be in a relationship with me? Guess what? I got some issues. I'm getting better, but I know at the end of the day, if I get pressed on it, I'm going to be very, very nervous about spending that $7 at Starbucks.
Yeah.
It's who I am. My partner knows that. He respects that. And he's like, okay, cool. That's how we're going to run this then. No problem. So it's not necessarily, it's a very hard thing to change, but that I'm very aware of it and I can make others aware of it makes a huge difference.
Yeah. Yeah.
Yeah.
So how do you work through some of those things, whether it's with yourself or with clients? Because I think, I mean, awareness is great, obviously, but I think our goal is to always work through as much of those as we can, and come out of that cycle as much as possible. But what are you doing to go and work with those clients or yourself on it?
So I've created a financial psychology assessment. So it's a series of exercises and questions that I walk a client through. We talk about everything from some of those money memories from when you're a child, to some of your best financial decisions, some of your worst financial decisions. We talk about trust, who you trust, why you trust them. We talk about your expectations around money, finances, financial advisors, bankers, that kind of thing. So I take them through this assessment. Takes about hour and a half to kind of walk through the whole assessment. So once we meet, I take all that information and I've developed the assessment so that they have a hard copy of it.
Mm-hmm.
So we go through it, we identify all the whys and what's going on. Then when I sit down with the client, I spell it all out, we take a look at everything, and then we can come up with next steps as to what we need to change. It's very helpful if a client has a plan already, whether it's just a spending plan or a cash flow plan or a retirement plan, whatever it is.
Some kind of base.
Something that we need to work on so that we have a goal. So we take the plan, we take the assessment, and we go through the next steps to actually implement the plan. Kind of like working with a personal trainer, right? Personal trainer tells you what to do. You might not go off and do it, so you work with the trainer so that you continue with the plan.
Yeah.
Same
Yeah.
kind of idea. Yeah.
Okay. And what kind of success have you seen with your clients on that?
Oh my goodness, it's so fun. I've had clients. I've presented an assessment to a client, and she's like, "Yep, yeah, here's the nail, here's the hammer. That's what you did." She's
Yeah.
like, I knew I did this stuff, but to see it in front of me and go, "Holy, that's actually hurting my life." Huge difference. I had one client who, growing up, was always kind of told, um, "You're not good enough for stuff." Like, "Oh no, we're not good enough for that nice car. We're not good enough for you to do that." And as an adult, she's like, "Holy crap, I'm still doing it. I
Hmm.
still don't think I'm good enough to buy the nice car. I'm not good enough to talk to an advisor." Um, yeah, so this woman now has gone out, met with a financial advisor, got her money invested, and is actually doing something rather than just letting it hide in that savings account because she was just too anxious to deal with it. So
Yeah. Very under the mattress.
yeah.
Yeah.
So
Yeah.
things like that, just even the awareness piece, people are like, "Holy
Yeah.
wow." Yeah.
Yeah. It's interesting when you said that. It reminded me of in Rich Dad Poor Dad when they talk about the line, "I can't afford that," or "We can't afford that," and a lot of what you're saying kind of aligns with that, where it's like, no, how am I going to afford that?
Yeah.
There's something that I have to do. There's an action that I have to do to be able to go out and do that, whether that's work harder, invest, save money, whatever those are. But there's a way to do it. It's not we
Hmm.
can't afford it. It's let's figure out how we do it, create the
Yeah.
plan.
Yeah. Yeah. It's all about changing how you think about it, right?
Yeah. Yeah. When you're sorry, actually, I'll take this a different direction a little bit here. If you're looking at a client, or if you're looking from a client's perspective, I'll say, and they're coming to you or they're going to another advisor, whatever that might be, you're in an industry that there are a lot of people that are not I'll say the most ethical or moral, and they're chasing a commission down. um, what should clients be asking their advisor, whether it's a potential new advisor or their existing advisor, to make sure that they're getting the level of service that they should be?
Oh my gosh, such a good question. It frustrates me to no end. Like I said, I've been doing this for 20 years, and to
Yeah.
have to compete against the used car salesman is
Yeah.
so frustrating. There are advisors out there that love their job. They love helping people.
Yeah.
Yeah, it can be difficult to find them. So a couple of things I tell clients is, first of all, go ask someone else who is financially successful, who is at that level of financial success that you wish you were at.
Mm.
Not your cousin or your neighbor that is the same. Find someone who's a step above where you want to be and ask them who they meet with. Have that conversation where, why do you like them? Why don't you like them? When I talk to clients in the assessment and we discuss who you trust, you really got to look at what qualities you're looking for in someone you trust. So,
Right.
for me, it's, you got to have a good work ethic. You got to be open to new education. Those are the traits I'm looking for when I'm talking to an accountant or a banker or what have you. So try to find someone with those qualities. And it is okay to interview advisors. Don't pick the first one that you talk to. Go ahead and have 3 or 4 conversations and see who you really
Yeah.
mesh with.
Hmm. Yeah, and I would say, a lot of people end up going to their advisor because their parents use that advisor, or they go to, Bank of Montreal because that's their bank, or their parents have always used that advisor there, and that person is, maybe not the best fit for you. So yeah, it
Mhm.
probably is a good idea to have that interview and go after a couple different people, because I mean, you're investing your money with somebody
Mhm.
that's now going to help you manage it. That's a big deal. They're helping you
And
manage your retirement.
and no one should care more about your money than you,
Hmm.
right?
Hmm.
Um, the other thing too is, I am an advice only financial planner. So I'm not going to sell you an investment, a mutual fund, anything. I'm
Okay.
simply going to do planning, and it's just based on an hourly wage type of thing.
So that's the fee for service model.
Yeah, yeah.
Yeah.
So there are several websites out there that you can go digging and find advice only planners.
Mhm.
There's Financial Planner Association of Canada has a whole section on advice only planners. So if you're looking for someone that's truly just gonna give you advice and that's it, they're not gonna sell you anything, they're not gonna convince you that their funds are the best, that would be a good route to go to.
Yeah, for sure. And I think probably 10, we were probably a decade ago that didn't exist at all, right? It really wasn't there. I think probably in the last 5 to 8 years, it's become a little bit more prevalent. I would guess that you're still in single digits, very low single digits of advisors that are actually using that model. And I think it's the model that is going to be moved into more from the client's requirements over the next decade or 2 decades, because it is the most fair model. You're
Yeah,
saying, here's how much my time is worth. And if you would like that time, then I'll charge you fairly for it. But then you can go and make those investments on your own, or use another advisor if you want, and to make
yeah,
those investments. And so I do think that there's going to be a big shift in that, especially when the fees are a little bit more transparent. Well, they
yeah.
are more transparent now, and I think coming up they'll be even more transparent on that.
Yeah, and it's definitely right now, someone who's an advice only planner, I can tell you it's a labor of love, because being an advisor at a wealth firm is far more lucrative.
Yeah.
So if you're dealing with an advice only planner, it's because this is what they believe very strongly.
Yeah, yeah, for sure. Well, good for you for that. I believe in Lethbridge we only have two
Hmm.
advisors that are fee for service. So I don't know how many financial advisors there are in the city, but I'm going to guess there's probably 100 or so, 80 to 100, and two of them are fee for service. So that's interesting, right?
Yep.
But I do hope that that'll climb in the
Yeah.
near future here.
Yeah.
Um,
Me too.
if my investment view, if we looked if we looked historically, my investment view, and this is kind of on the outside looking into pension funds and whatnot. They've always been under that 60-40 type of model where you're 60 equity, 40 bonds. I think we've seen the transition over the last couple decades where it's more 40-40-20, where it's 40 equity, 40 bonds, and now you're adding this alternative investment asset
Hmm.
class in there. The alternative investments being hard assets like real estate, gold, silver, and there's a bunch of other things that fit into that category. On the pension fund side, it's easy for them to get access to those alternative investments. On the individual side, it's a little bit harder. You're having to either buy gold or buy shares into a gold holding company, or you're buying into REITs or things like that. How do you view that shift into alternative assets? And are you advising clients along that lines? Are you hearing those questions?
Definitely hearing the questions, especially if you want to talk alternative when cryptocurrencies were booming. Um,
I wouldn't,
uh,
just for the record, I wouldn't put crypto into alternative, because I believe an alternative asset, a true definition of an alternative asset is also tangible. There's something
yeah,
tangible
good,
there. But
good. That's a good definition. Um, it, yeah, I do advise clients on that. The downfall is it is so difficult for an individual investor to get into.
yeah.
For you and I to go and buy a piece of gold, the cost of buying and selling the gold completely offsets the benefit of owning it.
Hmm.
There are exchange traded funds out there, which are a great way, like your REITs and that kind of stuff, to get into those for,
Yeah.
the normal person who has ten, $20,000 to invest.
Yeah.
Um, but you know, real estate is getting easier to get into when interest rates settle down a little bit, and the boom that's happening here settles down. But all of that needs to be a part of your portfolio. You can't just buy one mutual fund. You can't just buy one exchange traded fund. You got to look at a whole picture, right?
Hmm. Hmm. Yeah. And that's that diversification
Mm-hmm.
picture around it. When you are looking at the diversification strategies with clients, what are you? I mean, I know this is very individual based as well, but what kinds of mutuals or what kinds of bonds are people typically looking at that you would advise to say, here's that diversification strategy?
Um, yeah, okay. So it is extremely individual. So I
Yeah,
don't want to
yeah,
paint a broad picture. But I'm a fan of exchange traded funds.
Yeah.
That's what I use for my investments. You only need about 5 or 6 of them, and you're pretty well diversified.
Yeah.
And the fee is so inexpensive.
Hmm.
So that is kind of my first go-to. But however, having said that, when you're talking to that person who's never bought an investment at all, I'll still go towards a mutual fund, or even a packaged thing from something like Bank of Montreal or ATB or whatever, where it's all in one. Um, just get it invested. It's we can talk about the nuances as time goes on, but if you're just starting out, it is okay to walk into the bank and buy a mutual fund.
Yeah.
That's another thing. You're talking about the advisors that are out for themselves, that really irks me. But the other thing that irks me is these investment campaign, or these marketing campaigns that are like, you're missing out on millions of dollars.
Yeah.
Yeah, well, if you're not doing anything, you're missing out too.
Yeah.
So
Yeah.
just
Do
go do
something. Take an action
Yeah.
by, even if it's $100 in
Yeah.
an investment account. Start
Yeah.
somewhere and add $20 a month to it. I think people would be surprised at small increments how fast they can start to add up and things are compounded on it.
Yeah.
Just for those that don't know, so equity traded funds, they would be a non-managed fund that's directly correlated to a specific market or asset class, and they're constructed that way. Can you talk a little bit maybe about the benefits of, so a managed fund would be a mutual fund trust where you're paying a management fee and there's somebody actively managing it. Non-managed fund being an ETF where it's just correlated, and that's why the fees are a fraction of the other ones. Can you talk about maybe the benefit versus of the managed fund versus non-managed, or non-managed versus managed?
Yeah. So the exchange traded funds, what they do is they buy, let's say, a block of companies. They buy the top 50 companies in Canada.
Yeah.
They buy it and you hold it. There's no movement in there, hence the fee being very, very low. A mutual fund invested in the same block of companies will actually buy and sell within the mutual fund to decrease the risk. If something doesn't fit the fund anymore, they'll sell it. Something good comes in, they'll buy it. So you pay a higher fee on the mutual fund, but there's some active management going on. So for the person that's truly just is at the beginning and knows nothing, it is a good investment. Yes, you're paying a fee for someone to buy and sell for you, but it means you don't have to think about it.
Yeah.
Then your next step is those ETFs, where I'm willing to accept a little bit higher risk, and I still want to be invested in the market, but I don't want to buy individual investments because I just don't have the time or energy to research these things. That's another good way to go.
Yeah. And the fee structure, correct me if I'm wrong, I think a mutual fund is normally about 1.5%, and an ETF be about 0.15 to 0.25%.
Yeah.
Is that fair? Okay.
Yeah.
So I mean, there is a fair swing, 125 basis points or so, or sorry, 1.25%, I should say, swing in the fees. But those fees on a managed product, the client isn't paying that out of their pocket. It's coming out of the investment account itself. So it's not like you're having to pay up front for that.
In both situations, right? They're both
Right.
taken out of the
Yes.
investment. So
Yeah, absolutely. What do you see on the horizon for the markets right now? Whether it's, and I'll preface this by, you can't provide the financial advice, and everybody should go and consult who they need to on it. But what do you
yeah,
see on the market for maybe the rest of the year or the next couple of years?
don't have my crystal ball. You
Yeah,
invest for the long term.
yeah,
It's about what's happening for the next 10, 20 years always. Um, it's about diversifying. It's about just getting your money in as soon as you can. The short-term stuff is short-term stuff. It
yeah,
all always comes back. It always comes around. You just got to wait out.
yeah. And that's probably where a lot of that behavioral psychology comes in, right?
Yeah.
Where you're having to explain that to clients.
Yeah, for
Yeah.
sure.
Do you see that as a challenge? Is that a tough thing to get people's behavior shifted in that direction?
Once you actually sit down and identify what's happened in the past and how things could have been different, it's really not. It's it's difficult in the moment, yes, but when you lay it out for a client, it's not so hard. It's easy to
Okay.
see, oh yeah, this is what I should do differently.
Yeah. Yeah.
Yeah.
Um, now you work in an industry where there's not a lot of success rate in it. I think it's about 10% of people make it past a year or 2 years or something like that. That's not an exact stat, but that's my stat for the day. What do you think that you've done well, or other people in the field that had that longevity? What are some of the things that you're doing, or the skills maybe that you have that somebody going into that field would want to work on?
Uh, it's funny because the reason I got into this field was I was good with numbers and I
Mm,
really liked playing with stocks. Had,
yeah.
the little fake stock accounts where I was
Yeah.
buying and selling and trading. And I'm like, damn, I'm good at this. This is what I want to do. Yeah. Being an advisor has nothing to do with stocks and
No.
investing. No, it is about being good with people.
Yeah.
You listen to people, you understand their challenges, you're empathetic. It is a whole lot of those soft skills that make a good advisor. Um, Understanding people is the biggest key to being a great advisor. The
Yeah.
other thing I've always been told is I'm really good at explaining things in a simple way. I think it's
Mm,
because my brain is simple and that's just how I think. But I've been told that I'm really good at taking, the concepts of equities and stocks and bonds and explaining it in a way that people understand. So that's the other thing too, is don't you don't need to be a chartered financial analyst to
mm.
be a good advisor.
Yeah. 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 No, that's a very interesting comment, obviously. And I think I would echo that, like with the people I've seen in the industry be successful, that is, they're able to simplify these complex topics so that an everyday person that doesn't want to be in this industry can understand it. But then also on the relationship side, I think you have to be able to trust that advisor and build that rapport. How do you go about trying to make sure that, no, let me ask it a different way. If somebody was getting into the industry, is there something that they could do to help them in that trust building or relationship building area?
Yeah. So actually my coaching courses were phenomenal for that.
Yeah.
That was really they're difficult traits to teach, but the coaching programs really dive into that. So, if you can take a couple of coaching programs, that would be amazing. My master's is actually through Crichton University in Omaha. It's
Mm,
not an easy degree to find, but if you can find financial psychology or behavioral finance courses to take, the so CFP, Certified Financial Planning Association, they're actually introducing behavioral finance into the program now.
okay.
I'm working on something right now where um, they're introducing that so that your continuing education needs to be some behavioral finance stuff, and they've got courses for it. Uh, Take one of those, right? it
Yeah.
just it just teaches you a little bit more about how to dive into the relationship with your client versus the numbers and the planning and that kind of thing.
Okay. And for you, who is your ideal client, or who do you fit best with? Like if somebody's looking for an advisor, they'd say, yeah, I want to come and see you on that.
uh it's a huge range. In my previous life at a wealth firm, I dealt with the ultra high net worth,
Yeah.
and so cool, I've got the experience with the ultra high net worth, but now I'm focusing on the everyday. I just need help. I
Yeah.
just need to get this figured out. So, a person who's starting out and has got 10, 20,000 to invest,
Mhm.
cool, you can actually come and talk to me, who has experience in education and knows what they're doing. Get a little advice for a couple hours of work and get set up, rather than walking into the bank and dealing with someone who took an online course and is
Yeah.
now able, legal to sell mutual funds. So
They're your advisor now. Yeah, that makes a lot of sense. You had said something earlier on the show as well, where you're talking about um, the relationships that you have outside of, the financial relationships that you have as you're looking for a financial advisor, looking to somebody that's quite successful in that area to find out who they deal with. Well, on the flip side, if you're looking for an advisor, it might be good to look for an advisor that has also dealt with people that are high net worth, even if you're not net worth, because they might be able to help pave that way, or say, this is what this group of people is doing, and here's how we can help get you to that step.
Yeah, I actually, when I was still working at the firm, I actually had a couple book in an appointment with me and didn't know who they were, and go to meet them. And they're like, okay, we know we don't have enough money to deal with you today, but we want to have enough money to deal with you someday.
Yeah.
How do we get there? And I'm like, oh, this is my favorite client. Yes,
That's
let
awesome.
me tell you. Yeah.
Yeah,
So
that's awesome.
yeah, if you can find someone, again, I really do like the advice only financial planning. You can find someone to talk to there, at least you can get started on a path.
Yeah, for sure. No, it's awesome. Well, certainly appreciate your time on the show today. If somebody wanted to connect, reach out, find out more about what you're doing, where would they go?
I have a website, a moneymakermindset.com. I'm on Instagram, LinkedIn as Lori Curtis. Several different ways you can try and find me, but yeah, I'd love to hear from people. I really love what I'm doing right now. It just, it brings me a lot of joy, and it feels really good.
Awesome.
So,
And I'll put one plug in for fee-based advisors. Even if you're working with a financial advisor today, I've had a lot of people that I've talked to that will go to a fee-based advisor as well, just to help them out maybe a little bit more on the planning side, but also just to a little check and balance on their other advisor, just to say, hey, are they actually giving me the good advice on this? So it's never a bad thing to have a couple sets of eyes on something either. So I'll give that plug on the fee-based side.
You bet. Exactly.
Awesome. Well, certainly appreciate having you on the show today, Lori, and wish you all the best moving forward.
Thank you.
You've been listening to Beyond Wealth, Success Unscripted with Matt Calnan. Want to be our next guest? Visit beyondwealthpodcast.ca/guest. See you on the next episode.